Hello, everyone. This is the Free American Press with your host, Alexander Horat. And today we're going to be making a video on on the real estate market in relation to gold and silver and some other commodities. And we actually are both part of Gold Country Properties here in Northern California. So if you ever need any real estate work done in California, buying or selling, just let us know. So I'll let you lead us off in the presentation if you'd like. Uh,
Thank you. So I just wanted to talk a little bit about what the market is doing, has done in this last year. And so for that, I wanted to share the screen and make the relationship with um, the stock market, the real estate market, and gold and silver. Starting with the stock market, we've seen that the S&P 500 has dropped 19% this at the end of the year, relationship with the beginning of the year, which was up here. And he went down by 19%. The Dow Jones also did the same. He actually went down 8.6, close at negative 8.6%, as he related to earlier on 2022. The NASDAQ also actually dropped the worst to 33% in the negative range. REITs, which are real estate investment trusts, dropped almost 25%. There was an interesting article that came up today. Alex, would you like to talk about that, about Blackstone?
Oh yeah, and it also seems like just showing these different charts with the stock market that we're definitely heading into a recession
Yes.
um, because of the higher interest rates, which the Federal Reserve is talking about increasing into next year. And there's actually some pretty big news. So Blackstone's BREIT gets $4 billion bailout from the University of California. So basically, their Blackstone Real Estate Income Trust wasn't doing very good. They were losing quite a bit of money. And so they're actually receiving a cash bailout pretty much from the University of California, $4 billion. And that is a public university, so it gets government funding. So basically, it's showing a public-private partnership, how the government tries to help these really big corporations like Blackstone. So they're basically doing this so Blackstone doesn't lose all of its equity, that doesn't lose its company, because it's been going down in a huge amount. So this is going to give it the boost that it's been needing to stay afloat. So what are your kind of thoughts on that? How do you think that'll affect the real estate market?
Well, I think it's unfortunate. The big players always get bailed out. We've seen that happen in the last real estate crash in 2008, 2008 with Fannie Mae and Freddie Mac, that they got like $47 billion in bailouts for the subprime lending scam that happened. Blackstone shares were down as of December 13, 39%. At the end of 2022. So what I find interesting, why the University of California is involved in giving them a bailout. Apparently, they're not the only ones to get a bailout. Bankman-Fried asked a judge to hide identities of bailout guarantors, the people, the bail bonds that he got to get out of jail. He wants to hide the identity after the whole scheme. It just seems like we're in such an unfair system. Our economy is being run, our world is being run by criminals.
It seems like they only reward the people who have a lot of money, even when they do nefarious things. And it's really too bad because we see a lot of people losing their houses, having to do short sales because they're unable to pay the mortgage. And I think, unfortunately, that's going to become more and more prevalent as the interest rates go higher and higher, unfortunately, and money gets tighter and tighter.
It gets how much we even said these housing bubble and how the real estate prices have went up in the last few years and how great that's been because people have been able to build equity. But if we look in terms of US dollars, it went up in prices. But I would like to just show you a couple of things, because I was looking at a really old newspaper from 1950 that we had found at a garage sale, that a TVs for sale for $400. A TV cost in 1950, $400. Today, TVs cost $400, but $400 then was a lot more money than it is today. Basically, the US dollar has lost about 84% of its value since 1963. So I just wanted to show some relationships here. So we've seen, for example, let me just see here. Between the TV and silver relationship, we've seen in 1963, the silver price per ounce was basically face value. There is 90% silver content back in 1963 in all the coins. So a $400 TV will take, roughly 400 ounces of silver to buy a $400 TV. Well, in 2022, you can still find a TV for $400, right? TVs are around the same price. But the silver price, and this is the spot value, is $25 per ounce. It can be a little bit more because it's usually you can find it at $25 an ounce. But that same $400 TV today will cost you 16 ounces of silver, as opposed to 400 ounces of silver. So what do you think about that?
So that seems to make it be that the dollar is losing value into relation with silver prices, and that's
Yeah.
probably due to that vast amount of money that they've been printing
Yes.
dollar-wise. So that's
Yes. And
why the dollar worth less.
I wanted to actually show our national debt clock and how much money is in circulation and all of that in a minute. But basically, that's also telling you that silver holds its value really well. It has held its value really well since the 60s anyways, if we just take from the 1960s until now. But let's take a look at even something more interesting. So the median home price in 1963 was $18,900, which meant roughly about 18,000 ounces of silver. That was the face value, right? But it's about 90% of the actual
silver content.
Silver content. So in 2022, the median price was 385,000. So it will take 15,400 silver ounces to buy a median price house. So what are your thoughts on that?
Well, it seems like the US dollar has been becoming worth less and less, and that has caused the housing prices to go up. Um, even
But in
though silver silver prices have been remaining somewhat stable in relation to basically this chart is telling us.
right. So while the home prices have went up in US dollars, we don't seem to see the same as to the amount of silver that it takes to buy a medium price house. So basically, what this is telling us, the silver holds its value, whereas the US dollars lost all its value. So let's take a look at the next chart now for gold. So again, the median price of a home, 1963, was 18,900, which will take 536 ounces of gold to buy a median price home. Back then was $35 basically an ounce. Today, $385,000 will be your median price home, and it will take 213 ounces of gold. And the gold price today is 1,801 per ounce. So while the median price home costs about 20 times more today in US dollars, if we're only looking in US dollars, than it did in 1963. But it takes 40% less ounces of gold today to buy a home than it did in 1963. So that's not only telling you that the value is in the precious metals, that they keep over time, and this is proven by history, it has a 5,000-year history, that gold and silver has been the real currency, the real method of exchange for thousands of years, and it's held its value. So if we're talking dollars, of course, we're going to look at it, oh, it's going up, but it's really because the value of the dollar is decreased so much because our
And also,
economy is.
I was just wanting to say that also you could also make the argument that real estate has been going down somewhat in relation to gold anyway, because it used to cost a lot more gold ounces to get a medium priced house compared to today from 1960.
That's exactly right. And I just wanted to do one more thing. I wanted to show debt clock as it is now. So back in 1963, I'm sorry, yes, 1963, the US debt was about 600 billion. Today, that number is $31 trillion.
Wow.
So we see what's happening. That's the reason why we are in the shape we are at. And there was another article today about Michael Burry. He was one of the few investors who predicted the last subprime mortgage crisis that lasted from 2007 and 2008. And he said in a tweet later on Monday that while inflation has peaked, it is likely to pick up again in response to coming stimulus, which will be unleashed to offset the painful 2023 recession. And he also added that the US is in recession by any definition, but that the Fed will cut, meaning interest rates, which
Right.
this is interesting because the Fed has given every signal and basically said that they're going to continue to increase
Well,
the interest rates. But
I think I was just gonna say that I think if they decrease the interest rate, that'll cause runaway inflation. That won't be very good either.
that's exactly what he said. He said that the Fed will cut and government will stimulate and we'll have another inflation spike. So we're probably going to be headed into a hyperinflation if things go the way they're saying it's going to go. We've seen, I was looking at a chart and I don't have it in front of me, but the increase on everything, airline prices have increased 36%. Food prices have increased depending on what you're buying, anywhere between 10 and 15%. So, and of course, we've seen what the housing is doing and rents and everything else.
Right.
So my conclusion on this would be precious metals hold their value. And if anyone can always incorporate that into their savings, into their portfolio, is a way to stay out of the system. We know Bitcoin lost about 60% of its value this last year, and Ethereum lost like 70%. So those are cycles and a very speculative cycle. So if you want to preserve wealth over the long term, you will want to definitely invest in something tangible, and especially something like gold and silver.
Yeah, so what do you
What
think?
are your thoughts on that?
Well, it seems like that as the dollar continues to inflate, we're going to see real estate continue to go up. But that doesn't necessarily mean that its real value has gone up. That's just showing an asset going up compared to a really bad other asset, the US dollar. So I think this kind of uncovers the real value of real estate when you see it in relation to gold and silver, whether it's really going up or really going down. I think real estate definitely has real value going up if it's in like an area that has been growing like way higher than even the medium rate of housing sales. So it's just a good way to see the real value of your house and how it grows or how it declines. Because if you compare it to US dollars, that's not a very good measurement. And I think that's one of the key takeaways from this video.
And actually, I did see, I don't have it in front of me right now. I know I wrote it down and did the math, but you can do the same math with basically a lot of these other commodities, like a barrel of crude oil. It takes a lot, probably about half less barrels of oil today to buy a home than it did back in 1963. Of course, nobody's going to have barrels of oil, but just to prove the relationship, that with other commodities, that real estate actually the only thing that went up were so-called up, and we think is up but really down, is the US dollars, how many US dollars it takes to buy a home today.
Right. I think that's true.
So I think what people need to do is just diversify and be prepared, and just make sure that everyone is learning. I hope everyone can take something from what we're talking about today and apply it to their everyday lives.
I definitely agree. It's
That's
always,
all I have.
yeah. Well, I think you're definitely right. It's good to be diversified, having some of your money in commodities, some of your money in real estate, as little as possible in U.S. dollars, unless you need to be liquid in your buying and selling needs. So I think that's definitely something to take into
Yes.
account, and people need to know that. And well, I really appreciate you making this video with me. And I would like to say again, if any of you need any help buying or selling a house in California, just let us know. You can give us a call or you can email me at alexhorat@gmail.com. And I'd just like to say thank you for watching this video, everyone. And we're going to be making some more videos soon on some other real estate topics, so stay tuned. And I hope you all have a good rest of your day. Thank you, and God bless.